Hey everybody, Rebecca here for a portfolio update for July 2021. I'm sure that you saw the thumbnail and the title, and yes, it is true. I have made my first options trading mistake, and that didn't take long, right? So I'll tell y'all about that in this video. First things first, if you are new here, welcome to the channel. I'm on YouTube showing y'all my journey to reach financial independence and retire early. So I share these portfolio updates monthly. A huge part of me reaching financial independence is investing. I am new to options trading, but I'm really liking it so far despite having made my first mistake. But it's all a learning process, and to me, the options trading is just another form of passive income. So I am happy to learn it and keep up doing it. But yeah, if you're new to the channel, welcome. I share these updates monthly. I hope that you'll subscribe down below and follow me on this fire journey. Without further ado, let's jump into my M1 Finance portfolio first. All right, here we are. This is my taxable account with M1 Finance, and let's take a look at how we've done over the previous month. Oh, we're actually down a little bit for the previous month. I'm not surprised. I did update my spreadsheet before I started this video, so yeah, I'm not surprised that we're down a little bit here. The thing that is holding down my taxable account here with M1 is my speculative growth plays. The dividends are doing fine, but yeah, my speculative growth is the ARK ETFs as well as Hyliion, and y'all can see everything is in the red right now. That is okay. These are long-term plays. I do expect that they will provide a great return over the long term. It's just that in the previous month here, we're down. We're in the red here. If I had extra money, then I would be throwing extra money at these accounts, but my extra money right now is earmarked for paying off my car. So yeah, a little bit of a drag here in the taxable account with M1. Let's take a look at my Roth IRA. So my Roth IRA here, we are up over the previous month, $342. I should also say that I have not contributed any of my own money to either one of these accounts, and all of the growth that you're seeing is just pure growth here. And my Roth IRA is made up completely of Vanguard ETFs. These do pay a quarterly dividend, but they paid out in June, so no earned dividends here for the month of July. All right, moving on here. This is my options tracking spreadsheet that I got from Financial Options with Thumper YouTube channel. I love this thing and definitely use it for all of my options plays. I do my options trading in Fidelity, and I won't actually bring up my Fidelity account because it shows account numbers everywhere, which is really annoying when you're a YouTuber that wants to share things. But yeah, I keep track of all of the options plays that I do here in this spreadsheet. And if y'all are just interested in how that has gone over the last month here, y'all can see here $313.13 worth of premium earned in July from all of my options trades. And just briefly, I'll show you what I have on right now. If you're interested in options at all, I do have a put on with TQQQ for a strike of 50 that expires December 17th. And then I have some other smaller plays here with ticker symbol SNDL and then also MindMed. I have had my MindMed position with Fidelity for forever, and I am writing covered calls on my MindMed position. So looking at MindMed first here, just quickly, I've logged in all of the purchases of MindMed that I have done, and most of my MindMed purchases were done in 2020. I bought 377 shares in 2020, and I had a cost basis of 43 cents a share. Now, with 377 shares, that means that I could write 3 contracts for my MindMed shares because each contract is 100 shares. So since I am getting more comfortable writing options contracts now, I decided that I wanted to go ahead and buy 23 more shares so that I could write an even 4 contracts and have 400 shares of MindMed. And that's what I did. So the end of July, I bought 23 more shares of MindMed at $3.03 per share. So this raised my cost basis in MindMed a little bit, but y'all can see all of the covered calls that I have been writing on my MindMed position so far, and then I did write a put a long time ago. Yeah, I have earned so much premium on my MindMed position that even though I bought these few shares at $3 a share, my cost basis overall for MindMed is still negative. So that means that MindMed could completely go to zero. I could lose all of the shares that I have, or that they would become completely worthless, and I would still come out ahead because I've earned enough premium from writing all of these covered call contracts that my cost basis is negative. So yeah, this has been a really good position for me so far, and honestly, these covered calls that I am writing, if these shares get called away from me at the strike price that I'm setting of $5 a share, I would not be upset at that at all. That would be wonderful capital gains for me. So if they get called away, I'm not going to be mad about it. Moving on into the other position that I have, this SNDL. Guys, this is a position that I am trying that is a colony strategy. So my very basic understanding of how the colony strategy works is that you pick a ticker symbol that does not have a really high share price, and you get into these ticker symbols at a good price. You write covered calls against the shares that you have in order to grow the position quickly, and the return on capital supposedly with these micro cap positions is going to be a lot more than if you were doing the same strategy with a larger cap stock. So I'm giving this colony strategy a try with this position. I'm not sure how long I'm going to stick with it, because to be honest, the longer I'm hanging on to this position, the more I think about the strategy itself, the more that I'm kind of deciding that I'm not really that excited about owning these shares for these micro cap stocks that I really don't know much about at all. So I think that I'm probably not going to stick with this strategy for forever. I'm giving it a try right now with this SNDL ticker. But yeah, I don't think that this is something that I will keep doing over the long term, or if I do keep using this strategy, it's going to remain a very small part of my overall portfolio. So this is what I've got going on with this ticker right now. I did buy 400 shares at 90 cents a share, and I have a covered call against those shares that will earn me $89.25 if it goes to expiration. I do also have a put on this position for 50 cents a share, and that earned me $16.88 worth of premium there if this expires worthless. If I get assigned these shares at 50 cents, then that will lower my cost basis anyway, and I will then turn around and write covered calls against the 6 contracts that I bought at 50 cents. So yeah, I'm giving this colony strategy a try, but not sure how long I'm going to keep doing it. And that brings me to my first mistake of options trading. So how did I manage to screw up options trading already? My mistake was not making sure that I had clearance to do a strategy that I wanted to do with my current level of approval that I had with my brokerage Fidelity. I will spare you the long details about the back and forth that I have had with Fidelity over this last month, but suffice it to say that I bought a long call on another position that I was going to try this colony strategy with, and the ticker symbol for that one was IDEX, IDEX. So I bought a long call on that position, and I was planning on writing short covered calls against the 100 shares that I bought. This is known as the poor man's covered call strategy, and I did not have clearance to do a poor man covered call strategy through Fidelity. I believe Fidelity refers to it as a vertical calendar spread. So I bought one contract of IDEX, long dated, and I could not sell the covered calls against the shares in the short term. That was my mistake. Now, when I realized that I did not have the appropriate level for options trading and Fidelity to do this poor man's covered call strategy, I did apply for the next level up, but they did not approve me for level 4. You need level 4 to do poor man covered calls. I am only at level 3 with options trading for Fidelity, so I can't do the poor man's covered call. That was my mistake. And I had already bought this long leap on IDEX and I couldn't do the short calls against it, so I decided to go ahead and just sell to close that position, and I did sell it at a little bit of a loss. I only lost $36 from getting rid of this position. So yes, it was my first options mistake, but thankfully it was not a big one. And lesson learned there, make sure that if you're wanting to try a new strategy and grow with your options trading skills, make sure you have clearance first before you dive into a strategy and come to find out later on that you can't actually do the strategy that you're wanting to do. So I no longer have that IDEX position. It cost me $36 to get out of there, but that was a lesson learned. And if not for that $36 mistake, then my realized options income for July would have been about $350, which was nice. But because I lost that $36 there, it was only $313 or something like that. So yeah, that was my first options mistake. I am sure that it will not be the last. This is all a learning process, but overall, I cannot be mad at the way options have gone so far for me. All right, here we are. This is looking at my August budget spreadsheet. I am actually filming this on August 1st. So here are all of the totals for my various investing accounts that I have right now. My taxable M1 finance account, $2,946.56. My Roth IRA is sitting at $22,190.68. My total amount that I have in my Fidelity account is $7,459.30, and my largest account, my work retirement 403b, this one is sitting at $102,440.70. So my overall portfolio is at $135,000. My goal for financial independence is $1.2 million invested, and I am 11.25% of the way there. And if y'all are wondering what this number out to the side is, this is all of the money that has gone to investing for me for 2021 so far. And this is all of my accounts combined. This includes my employer match for my 403b as well. Okay, everybody, I hope that you enjoyed this July portfolio update review. Leave me a like down below if you have. Let me know how investing has gone for you for July. As always, I appreciate it if you made it all the way through this video, and I will catch y'all in my next one. Bye, guys.